Hi, welcome to the Market Alert for Wednesday, the 30th of July 2025. So stocks drop, bonds and oil pop as China agrees to tariff truce. Trump reiterates Russia threats. The chaos is coming. It sounds like it, doesn't it? US stocks mildly retreated amid a deluge of earnings as risk events approach. And SPX and 6-day rally amid mixed US data while dollar rally extends only for a short while. Economic news today, well, the only one that's worth looking at, of course, well, we've got the ADP. That's a precursor to the non-farm payrolls. And then obviously the big one today is the US interest rates, which are from what I can see, to remain on hold. And that's not going to be liked by Trump. So let's see what he has to say this time tomorrow. But let's have a look at this retreat in stock prices and kick off with the Dow. So yesterday we see the Dow moving lower. There is some demand there though, but we have rolled over as far as the momentum is concerned, which means that we could see the market sideways to low, particularly if they keep rates on hold this evening. That's going to add some sort of weakness to the market as well, because Trump isn't getting his way. The market isn't getting its way either. So yesterday, even in the morning session or the electronic session for the Dow, we saw the market spike down. And then eventually when the cash market opened, prices moved to the downside as well. A bit of a bounce overnight, but the market needs to get above the DP in order to move higher. And failure to do this is likely to see yesterday's low being tested, like I say, particularly as they leave rates on hold. In the German DAX, we're stuck in this sideways range. Yesterday the market bouncing off the support of the lower part of the range, which you can see there. The market coming off with demand yesterday. There's the all-time high at 26,644. We're in a consolidation phase at the moment. But yesterday, nice move back to the upside from the kickoff there. You can see there the market moving higher. However, the 200-day moving average is giving this market a bit of grief at the moment. You can see their prices are struggling. And again, we've got the FOMC meeting minutes this evening, which are going to impact all of these markets. In the S&P 500, well, as it said, the 6-day streak is over. The market down. We've got a bit of demand there, and the momentum, however, is switching to the downside there at the moment. Still above the 80% though, we're showing the momentum still on the upside, but struggling there a bit at the moment. One thing you can do to test this momentum, if I just widen this out a bit, is to go to the recent high down to the recent low. And if the market fails to get above the 89%, if it rallies back up and fails at this level, then you're likely to see prices starting to move to the downside. So there's a way of actually watching and measuring this. Yesterday we were fine on the upside, prices moving up, and then just before the cash market, the electronics started to round over, and the session there you can see is on the downside, apart from a couple of bounces where we see prices then move up, but struggle with the 200 MA and then move down. But overnight prices heading back towards the DP there, the 200 MA and the 50 EMA. Watch the low of yesterday, as this could be an area that could be retested there. Meanwhile, in the UK, everything's fine and dandy. As we can see there, we're heading back to the 91.75, and also if we have a look at what we've just been talking about from this high, and I click on the same low as well because it's the same low there, you'll see we're just at that 89% where the market is currently trading at there. So it needs to get above this in order to move higher. 30-minute charts, again, we were sideways to begin with, and then the market took off, apart from a little pullback there over an hour, and then the market remaining sideways and is very strong as it heads towards the high. It is just unfathomable, but it is what it is, particularly after Starmer's performance with Trump the other day. I've never seen anything like it. Have a look on YouTube. Anyway, let's leave that aside and move on and have a look at the US dollar. So the US dollar managing to put in another decent day, or half decent day. And I say half decent because the market ran out of steam at the resistance to the left there. and also just above the resistance here. Market showing a bit of red there. As soon as Trump doesn't get his rate reduction, you may see a bit of an up move on the US dollar, but this is soon going to be followed by weakness and prices moving lower. So let's have a look at the metals for yesterday. And in the metals, surprise, surprise, despite another good day for the US dollar, silver is managing to hold. The momentum has switched to the downside. We're in the oversold territory. Market is back above the 20 bar moving average at the moment, and it was yesterday and also on Monday. So again, we could expect a bit of a move to the upside. I can't believe how they're not smashing this price down, given the strength of the US dollar at the moment. This really is a surprise to me and to many others who trade the metals, that they're not being hammered down purely and simply because of the US dollar's strength. 30-minute charts, you can see they're very choppy. You can see the LBMA there, see the choppiness there. Overnight they tried to slam, but the demand came into the market. It was oversold, and price is now managing to get back above these averages. Meanwhile, gold sideways to lower, a bit of a downtrend there, but we're sort of in a range which you can see there. And then there's ranges inside of these ranges as well, where the market is actually making these rising lows as well. So the market trying to attempt to come back to the upside there. And finally, in the 30-minute chart, again, you can see the LBMA fixing the price at lunchtime yesterday. So at the moment, trying to head back towards the highs there. So we'll look at the gold-silver ratio. And as you would expect, if the prices are silver, then the prices are sideways, then you can expect the gold-silver ratio to be sideways, which it is at the moment, stuck in a bit of a range that's becoming smaller. And the smaller the range becomes, the bigger the explosion of the move when it does break out. So again, treading water at the moment, waiting to see what the Fed does tonight and then reacting to it accordingly. So don't be surprised if they try and spike the market down with no change in rates, because gold and silver like rates to come down. But that weakens the dollar and strengthens the metal. So don't be surprised if that's used later this evening at 7 p.m, despite the fact that they already know what is likely to happen. So have a quick look at yesterday's 2-minute price activity. And in the pre-market, we see prices moving strongly to the upside, and then we get a bit of a pullback before the cash market opens. And then from there, we get the market moving up, take out the weak longs with the shorts beforehand, and then just keep moving the market to the upside. It was relentless there, as you can see, and then became sideways mid-morning, as prices continued in that range to the upside, and then coming back, as you'll see there. And then into the afternoon we get the Dow session, where we had a losing trade to kick off with. In this short, the market didn't fill, and then we had a long that did fill, and then we see the selling coming in, and then the market coming back and taking the trade out just before the economic news, and then moving the market down to the 200 MA and just slightly beyond this, back into a sideways move. And then before we get another trade in the moment on the short side, which you'll see just coming up. So the market, they're struggling with the 50 EMA. We then start to move to the downside, and then we see this trade filled, making up the losses. You see the buying coming in at the psychological level there, and then prices becoming sideways to lower once more as we go into the late afternoon, and then into the evening the market recovering a bit with the Dow, as you'll see there. So where are we at the moment? Prices are in a sideways to lower range there. You can see they've just broken out to the downside, heading down towards the 200 MA. And if we break the 200 MA, you'll see them trying to buy in there at the moment. You see the volume building, then the close, and then of course yesterday's low, which is quite some distance away. But never say never at the moment, the way these markets are trading. We're not too far off the high though. If we just reset, bring it back, you'll see the high is not too far away at all at 24 313. Okay, that's it for this one. Say the market's going to await events for this evening's non-farm payroll numbers. That's Friday. The FOMC meeting minutes to see whether rates are going to be left on hold or they're going to be cut, which I very much doubt. And then the fun and game starts tomorrow between Trump and Powell. I think there's a bit of grandstanding going on at the moment as well between the two of them, as opposed to being more frugal about the economy and all the rest of it and getting rates down. Powell is standing his ground to say, look, you might think you're in charge, but when it comes to the Fed, it's down to me. So there we go. Right, well, have a good day. And as ever, thanks for watching. See you in the next one.